Welcome back to Be Great Economics. This is Nate. Let's get started. This is our weekly update for the stock market and other investments. So we're going to start off with the S&P 500, and as you can see, we're still inside of this general uptrend channel. However, we are barely testing into it. This could be a back test and we could get rejected. This is concerning to me overall because even though we wicked down here, we accumulated and then went back up. To me, this is a little problematic. Now, that said, like this could become a dead cat bounce. We could see it go lower and ultimately not break this down line, and that could be an issue. But I am still currently anticipating the potential for a melt up. If we get above all of these hot zones here, then yes, I think we still have plenty of room to go up. I think there's a lot of upward pressure that can show up, and honestly, after looking at how this market has responded to bond yields, how it's responded to current global conflicts with Russia, I think that we are looking at a lot of fear that may be a little too speculatively misplaced. And as Raoul Pal points out, don't try to trade geopolitical events because you don't have an edge on the news. As we saw on Friday, I think last week, we had PBS of all places put out fake news, truly and honestly fake news about the U.S. having intelligence about a attack in Russia. What did it do? It caused this sell-off right here, right? What actually came out? The U.S. an hour later said, "Oh no, that's not true." Right? So don't try to trade these geopolitical events. Stick to the basic TA here, and this is still concerning, but overall I am still seeing that we are following the typical uptrend, and a basic test of whether or not you are in an uptrend is, or whether or not your bull market is over, is you come to the highest point, draw a line. Come to the lowest point of the liquidity test, draw a line. If you break below that liquidity test, that's it. You can cut, and if you can't break above that top test, that's it. It's over. That said, and you can back test this here. Let's go back and back test this. Let's go on the monthly. Look at that. Look, there's the Nasdaq back in 2000. What a perfect little bubble. We'll draw that line. Boom, boom, whatever. Draw that line. Boom, boom. Look what happened. This is that anxiety phase, right? This is where it gets painful to look at. So just be prepared that the market could sell off beyond that point. But if you don't break below that liquidity test, right? Also note this. We have this upward thrust. We have a liquidity test and plunge. Let me add this right here. Let's add the RSI because you can see this one in real life and how that looks. This plunge comes down, and then it comes even lower even though the RSI holds, right? So you're clearly hitting a lot of fear and a lot of chaos. You try to come back up, you can't get up to the top. You reject down. Once you break below that liquidity plunge, it's over. It's just not going to recover. So be prepared for that. It usually will fail. So if this was the long-term top, we'll get below $13,872, and that's it. That's all she wrote. But I want to go to my NASDAQ divided by the S&P 500. And we can see that, oof, we are playing with fire here. So this, we got back above the line, right? And this can read as a wick, right? It can read as a wick, but you wanna watch this cautiously because even coming down to this line here, NASDAQ versus the S&P can be concerning. One, how much does the NASDAQ have to sell off in order to make this happen, or how much does the S&P appreciate against the NASDAQ? I don't know. But I think we're still in our macro uptrend. I think we're still looking at a long-term blow-off top. I think that the melt-up is still potentially viable, but that none of this is a guarantee. As I've said, there's plenty of other external factors. A lot of the speculation could have gone to crypto and given it blow-off top there. We are seeing plenty of trends that show there's been more than one peak in multiple assets. Netflix, Tesla, Google, Apple, these speculative stocks that have given you one big up thrust and another one just slightly higher. Now in 2000, we saw like Amazon and Adobe and other companies have peaks really close to the Nasdaq's peak, but they were split left and right all over the place. And even though they had an absolute peak before or after, they had like 3 peaks, so they kept coming back to surprise you. And when I play that game of 3 is that this is the playing with fire portion of betting on a melt up, and this is why I've said repeatedly this should be a small asymmetric. I'm willing to lose it in order to make a large gain on a small bet, but don't bet the farm on a melt up because it's just crazy, right? If you're a long-term investor and you're buying the dip on assets, fine, so be it, but I hope you understand how to assess those valuations from here. Let's look at the VIX real quick because I want to show how much more volatile this has been. You can see that this was 2009, here's 2020. This isn't too bad, but this is more chaotic and breaking out overall than we got here. And we're not getting the typical sharp line up and slow burn off. We're kind of getting a lot of little thrust here. So that's concerning to me, is that what we're doing is we're building and then we get an up thrust here. It's viable, it's possible. We broke out, we've retested, so just be cautious that the volatility. I would prefer to stay a little long vol as my hedge here. So we'll look at the US 10-year. Remember, the bond yields have been going up. Where has that capital been flowing? It's been going into other assets, but it's not necessarily feeding into the stock market, so it's got to be going to other things. Overall, long-term downtrend. We have a really high bit. I am surprised we're up here at 2.3%, 2.03%. That impresses me. I think that there's still room to go, but ultimately we're running into this area of resistance that's been here for like almost 10 years, right? This hot zone right here, more than 10 years, this hot zone of rates. And that hot zone of rates, to me, is going to start to signal to the Fed that they're going to have an issue servicing new debt from here. So new issuances are going to be an issue, meaning that the yield is going to keep rising and they're not going to be able to pay those over the long term. And the Fed is ultimately going to continue QE in some way, shape, or form. They say they're going to taper. I haven't really seen it yet. We're at 107 billion as of January, the end of January, and they were doing 110. So whoop-dee, 3 billion. So let's look at gold. Or nope, we'll go to U.S. oil. Go to energy first because I want to talk about this one. So oil right now is definitely on an uptrend, right? Obviously. We are still in that uptrend, but we broke out of this this cone here. And what concerns me overall is that oil in the long term can very much come back up to these highs. But for the short term, okay, so I poorly called this last week because we came up and up thrusted into here. But you can see how high the RSI has gone again. But I would expect that we are somehow topping out here. I think ultimately it's overextended. Everybody is talking about going long on oil, except for the true bears. And I just think that when you start getting everybody thinking long oil, and let's be realistic, the rest of this wasn't geopolitical problems, right? The rest of this was supply chain issues, followed by inflation, followed by higher demand showing up as we start doing recovery out. So we can probably come back down and retest the $70 range. I think it's very viable that we do. I think ultimately we're looking at least coming down here. Now, building up, do we really think with these cones, usually you build up on the outside, top or bottom? Do we think we build on top, or do we think we build on the bottom? Do we think we reject down the length that we came up from through the cone? So that would be back to $42 a barrel. History tells me that's an unlikely scenario. But overall, I would long-term be long oil. Short-term, I would expect to pull back. I will be looking for entries. I would sell puts rather than buy puts here. So personally, I'm long oil in the long run. So you are a uranium. Okay, I brought this up about 3 weeks ago when it was getting real hot, and there was information globally about kind of riots and issues, and it got spiked up, and I was like, don't buy it, don't bid it up. And sure enough, it just kept going down. I started some re-entries back in here before we broke out. Now that we've broken out, I would say this is better. We are back in a zone that has been retested multiple times. Personally, if we break below this right here, the 1885, that's where I'm going to go, okay, as a trade, this is not good. Long term, sure, I'm still bullish on uranium, but short term, I have some complaints and concerns about the stability in the market because of the hype that's been here. Now, that said, this has given it some time to cool off, and I think that that's reasonable. I think that we can expect some good performance out of it, at least in the near term. And in the case of a melt up, it'll probably bid up as well, just like everything else should in a melt up. Let's go to gold, right? This one's been the talk of the town. Oh man, finally happening. It's happening. With gold, what I want to bring up here is the breakout that, of course, everyone else has already highlighted on Twitter. I've been sharing these things here and there, but look, it's a breakout, it's a retest, it's not yet resumed. Do I expect it to come back down? Probably. Can it come back down below the wedge? Yeah, sure, it can. Ultimately, we're still in a general uptrend. We're still tightening here, but I see this as very bullish because it got a ton of volume. Let's see if this one has volume on it so I can show you. Does gold itself have volume? No. Let me show you on the GLD just for reference. Look at that. Look at that volume spike right there. That's crazy, right? This was selling. This was buying. That's pretty good. So, yes, it can reject down, and I think a thing that would hurt it would be a cool down of geopolitical risk that would cause there to be less interest in gold in the short term because they would see it less as a risk-off safety move necessary. But let's go to silver. Let's see Nate's Wyckoff accumulation that's been going on for, I don't know, months, 6 months now I've been saying this. XAG. Months, just months of it. Look, I don't know how to make this more clear. Each time it bids up is not it yet, but we are very obviously heading into the phase where we're going to get bid up pretty strongly because we've been seeing volume rise. And what's good is we're seeing gold get bid up faster and harder than silver in terms of its typical price moves. This to me is bullish overall because we should see gold lead. And I can compare the SILJ to show this one. We're going to start seeing minor resilience, right? Give me 1 second. Get that one into view. Look at that. More selling in silver than in the silver miners, right? When silver miners lead, silver tends to follow. And it's more bullish because it means long-term investors are here to stay, as opposed to if the silver price gets bid up, they're speculating on the metal itself, and there's not a lot of big money speculating on the performance of miners. So that's good to see. Now let's look at copper. This one, this trade that we're doing for our 10 trades, $1,000 to $1 million. This is our second trade, take 3, because it took a couple of entries on other things to finally find a point that'll work. I think that this has a very good viability to play out. We're still seeing an uptrend. I'm seeing it perform a lot like gold. And then here's another bullish point that I found. There is an inverse correlation of oil to copper. So if we get a short-term downtrend in oil, that can send us an upward spike in copper temporarily. Overall, I'm betting on the metal itself and not the miners because I see this as a short-term spike. Copper has a long history of being extremely volatile. The rejection of this trade ultimately would be falling below this wedge, and I don't see the trend appearing yet. The only thing that I think is really going to stop us is major deflationary pressure from some type of market crash or risk, which we are currently not seeing in the monetary system because we are flush with cash, we are flush with liquidity. Contrary to some of the Federal Reserve's beliefs. But they are starting to cause a shortage in it, and the futures or the bond market is telling them that there's still risk out there, but we're not there yet. So let's look at Bitcoin. We'll go to BTC, the normal one first. Check out Coinbase. So these are other people's trend lines. Okay. Jordan Lindsay's pointed this one out. We also obviously broke out of this downtrend, broke out of Jordan Lindsay's downtrend. And this one is from Jesse Olson on Twitter, also a good trader follow if you're a trader. For me, some people are calling this a inverse head and shoulder pattern. I don't like head and shoulder patterns because they have like a 57% chance of success from proper execution, and then the chance for the target to be hit, which is from the center top of the head down to the neckline, reflected is basically like I think it's like a 16 or 20 something percent chance. I can't remember what it was, but I pulled it up before because quite frankly I was annoyed at everybody calling out heads and shoulders, and I just kept telling them like it doesn't work that way. So we might reject off this temporary short-term downward trend, but overall this is seeming relatively bullish. I keep saying like, look, the on-chain metrics are looking great. I don't know how else to explain it except it looks more like bear market bottoming trends. At best, we get a bottom down here into like 28, and then it's still people accumulating even more. So I just, every time the price drops, accumulation by long-term holders and the whales are in an uptrend, it all looks good. And so the only thing that I'm just cautiously watching is that price weakness in general. So if we fall below this trend line again, I would be a little more concerned. But until we get above here, and as I've said overall, if we can't get above 45, we're not going to be, for a while, we're not going to be going up. If we start to see a distributive top up here, even if we break out of this downtrend, I have a hard time getting bullish on price action in the short term if we can't get a strong, healthy upthrust above this major area zone of confluence at 45,300. And then, as I said, 53,000 is your next target. So that would give you a pretty good shot for about 8K of a price action, but from this current point. But overall, I think that I'm bullish on this long term. In the short term, there's some issues. And let's pull up the Bitcoin all-time history index because this has been my Bitcoin all-time history index. I made this chart, I don't remember when, a few months back, right? I put this on my page, talked about it basically on my YouTube and everything, about how basically this is an extension of Jordan Lindsay's viewpoint that this is a technology adoption cycle, and it goes through these cycles of up thrusts of speculation and then cools off and doesn't really hit a blow off top again. It just keeps doing the same trend in an uptrend. Now, the thing that's hurting it, because I think I made this like way back here, we're below the center line trend. Now, this is relatively normal, but I would anticipate to possibly play down in this little sandbox area here. Now, that doesn't mean that we can't come up and retest it, and look, we'll be at 72,000. And that would be a bear market top. That's weird. It would be like this right here again, back in 2019, right? It would be coming up and retesting against some resistance, and it would seem like we got to all-time highs or near all-time highs. But the reality is that it's trended in a bit of a downtrend in terms of its overall logarithmic progression. But I think overall that as long as we stay inside of this channel here, we're holding up to that viewpoint on how technology gets adopted. And you go back and you look at on log-based 10, you look at Amazon, you look at Netflix, you look at Google, they get the same thing where they go through these really fast up thrusts and a lot of like mania tops, usually in sets of some type of 3. There's one type of collective deflationary event, which some have called that this might be it. And then from there, it just continues up. So long term, still bullish. Short term, I don't know how to make heads or tails of it other than if we can't get above 45K, I just sit here and continue to stack sats on a spot basis. So, and then let's go to altcoins real quick. ETH, Bitcoin. We're just going to use this as a, whoops, keep doing that. We'll just use this as our general index and talk about how basically we're still in a downtrend on this, which is good to see if you're a Bitcoiner because you are basically seeing that Ethereum cannot hold up to Bitcoin right now. Now we've gotten some up thrusts and some retests, but ultimately we're still on a downtrend, and this reflects in the on-chain metrics. You're seeing long-term holders in whales still divesting their Ethereum. So if you're an Ethereum holder, it's seeing big insiders still selling tells me that it's still really high priced and there's not a lot of confidence in the uptrend. And as I pointed out before, Ethereum Bitcoin is much more responsive and correlated to NASDAQ, minutia movements than Bitcoin is, which is rather impressive because people see Bitcoin as highly speculative. I think Ethereum draws even more of that attention. So we'll see how that plays from here. And I have one last thing I said I would bring up before that I didn't because I didn't think that it was time. But we'll bring up marijuana stocks. So this one, I've been watching this for a while. It went through the full psychology of a market cycle, right? I mean, the full thing. I got caught out here because I accumulated down here in this range. Multiple different, mostly over-the-counter stocks. I use this as an indicator of how the market's doing, but I accumulated up to around this point. And then it went crazy and I just started selling. And man, this has been one of my cleanest trades, except for this downside, because I got too caught up in the it's probably found a bottom narrative by doing this. Once it broke this downtrend, I was like, oh yeah, let me re-enter here. Yeah, no. I still see this as a good fair value range for it, but a lot of these stocks they have taken on a lot of water in terms of debt. I think that there's a huge bullish opportunity in a lot of these small companies, especially the more you look at it, the more there's evidence that the United States is warming up to the idea of just legalizing it. But the legalization, whether or not it's full federal legalization or just tax benefits, we're just looking for these companies to become more profitable. And so in order to trigger it, you need some type of event to do that, which kind of was back here when when the blue wave came into Congress and the Senate, and honestly, there were some making comments about how this administration is going to legalize weed. It's like, okay, that sounds like manipulation to me because you don't know that, and it sounds like you probably took call options on weed stocks. But anyways, we did break the short-term downtrend. So to me, since we are back near 2020 lows, I mean, we are so close to 2020 bottom that I think that this is a good opportunity to accumulate in the zone. Doesn't mean it won't go lower. Doesn't mean that all the stocks in the THCX index are of value. So you do need to do some good analysis on each individual stock you invest in because there is a lot more risk in this space while it waits for legalization, which is the mania phase that you'd be betting on. And that is kind of not really macro, but it is a watershed event for a market to collect on, which is going to cause a massive blow off top, like this event right here, where there was a realization that senators and congressmen are continually talking about it. So long term, I expect a good uptrend. I started reaccumulating again down here, but I would be cautious with what you invest in because you could throw money at a dartboard and lose 70% of your value and then make a 5x on one of them and not make up your total investment. So please pay attention and be cautious. But overall, I do like this space. I will be accumulating in this zone. So thanks for watching. I'll see you next time.